Hi everyone, short video today, so let's take a look at the calendars as well as the charts. Then we'll finish up with my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at the calendars, all we had today was the 2-year note auction, and it came in about 0.5% lower than the previous auction, which was quite good for markets. Interest rates continue to tick lower. As long as interest rates and inflation continue to go lower together, we should be in good shape. And then looking at tomorrow, we got the 5-year auction. That's just about it for Wednesday. Let's go ahead and look at the week. Not very much data coming out for the week. Initial jobless claims continues to be interesting. 10-year note auction this week as well, pending home sales on Thursday. And then on Friday, basically no data here for Friday. So really very little information. So really very little economic data for the week, but still watching initial jobless claims for Thursday. Moving over to Max Pain. Max Pain sitting at 469, currently sitting at 475. So we are sitting way higher than Max Pain. Total options 1.8 million for the Friday close. Put call ratio way lower than we've seen here recently at 1.55. Seems like the bulls are really jumping on board, and we did see that on the Sunday video with the high percentage of bulls looking out for the next 6 months. Call wall 475, 480. Really strong call walls going into the Friday session. I would expect a little bit of weakness going into that and a finish between about 470 and 475, which does mean we have about a point of downside potential for the Friday close. Moving over to the charts on the SPY, you can see we basically gapped up and rallied throughout the session. You can see straight up throughout the day. Did throw a wick on the last candle of the day, which was interesting. Ended up about 0.42%. But the big thing here is that we did get above 474.78. So the next level for me, 479.30. And I believe that is the all-time high. I don't have any levels here above that for the SPY. So next level, about 4 points higher, trading off of that 474.78 level as resistance. Bullish momentum, RSI not looking great, but still bullish. You can see a little bit of a step down here on the hourly. Overall, everything continues to look bullish on the SPY. Moving over to the NASDAQ, same thesis, gapped up, rallied, got above my 410.46 level. That was the wick high from Wednesday. Everything continues to look bullish here. If it pulls back a little bit, I want to see 410.46 hold. See that VWAP hold, and then we can continue this leg higher into price discovery for the NASDAQ, which continues to make new all-time highs. And then looking at momentum on the daily chart, we did see a step back towards bullish momentum. RSI continues to stay above the SMA. Not great to see volume stepping down as prices go higher. I would really like to see volume either level off or start to build as prices are going higher. But right now, everything still looks okay, and the structure is intact. Moving over to the Russell and the Dow, Russell had a big day, 1.3%, gapped through that level at 110.71, continued up to the next one, touched 402.62, almost to the penny, and now we're right in that range. Everything looks bullish. Once again, continuing to break out of this range, and then looking at the Dow, still range bound actually on the Dow, which is interesting. So we're still below the high here from the Tuesday close. We're still below that wick high from Wednesday. So Dow still consolidating, Russell breaking out and looks more bullish. Moving over to Apple and Tesla on the daily charts. I want to highlight that Apple has had 4 losing days in a row. It has now broken below all the short-term EMAs. Next level for me, down at 189.96. And this looks really bearish here. You can see stepping down in momentum into bearish territory. RSI looking to break below the 50 line. You do have a consolidation here, and you can see that volume profile right in that zone at 189.96. So that is my next price target to the downside, and this looks quite bearish, at least in the short term. And then you got the 55 EMA all the way down at 185.11. So short-term bearish on Apple. Tesla, however, continues to grind higher slowly. It did close above 255.44. Again, we did do that on Tuesday of last week. Since then, we haven't been able to close above it. We did do it again here, so this structure is slightly bullish. It's still in a kind of consolidated range. You can see we're still below that high from Tuesday like I talked about. If it breaks above that, that's going to look quite bullish. But 255.44, that's your stop right now. Above that, you have 264.68 as your price target. Moving over to staples and discretionary. Staples had a big day, 0.42% to the upside. Structure still bullish, right at that 144. We've only closed above it on Wednesday of the 13th. So far, we have not closed above it since then. If this breaks above it here, and closes above it tomorrow, that could be quite bullish. Still looking at a 72.50 price target at the 200 SMA, and really the structure is still intact for me. I do think this is still quite bullish on staples. Discretionary is still in this consolidation. You can see my short-term highs and lows here, continues to trade in that range. It did close above 180.10 just by a few pennies, but it is almost dead center in that range for me. So consolidation on discretionaries, bullish thesis here on staples. Moving over to breadth on the 20 and 50-day averages, you can see we did get a step up on the 20-day average. We are still hovering at this 86 level. You can stay here for quite a while. We've seen that before. You can see consolidations back to April of 23, consolidations here in October and November of 22. So you can stay here for a while, but the bigger thing that I'm watching here is this 50-day average. On the weekly chart, you can see every time we get into this zone, it does break down quite quickly. We have now spent 4 weeks in a row in this area. We continue to hold at this resistance. And once this starts to break down, I do think it's going to go quickly. We're getting a second step down in momentum. And every time we see that, there is usually bearishness to come. And it does usually come in the next 2 to 3 weeks. Moving over to the dollar just for a moment, the dollar really didn't go very far. It was down slightly, about 0.25%, but really it's still within this same trading range. The low from Friday was down around 101.46. We did get down to that low. You can see we gapped up a little bit on the rollover of the day. We were in that trading range for most of the day, so still slightly bearish on a closing basis, still watching that 101.25 level. I do think the dollar is starting to gain a little bit of strength. Let's go ahead and look at that on the weekly chart here just for a moment. You got the 144 EMA sitting down at 101.76. Momentum still ticking towards bearish. We have not seen a step up yet, so still bearish conditions here on the dollar. Moving over to the VIX here just for a moment, you can see we did get a gap up and a fall on those candles, bearish momentum, but you can still see this slight uptrend that I am watching. We saw a couple of spikes on Wednesday and Thursday. So far we've sold off from there, but we are still holding at a higher base. You can see we're right around that 13 level, above my 1275 level after getting very close to 1177. So just a little bit more volatility in markets, despite the fact that markets continue to go higher. Just something to watch as we go forward. Moving over to my accounts, I did make a few dollars on the day, which you like to see. I did roll out here to 189 to 52 days from now on my IWM position as it broke out, as we talked about. So I do have $18 credit on that position now out to 189. I did pay a little bit for that move, but it does give me a little bit more room to the upside to play this as it continues to move higher. The breakout was pretty clear and you have to play that. And then looking at my Q's position, I do continue to play with these one-day puts to continue to protect these calls that are pretty far dated. They are continuing to get squeezed, and I do have to pay attention to that. I'll continue to roll them out on a weekly basis as the weeklies become available to help protect myself on those positions. And then if I get assigned on these 144 puts if I get assigned on these 411 puts tomorrow, then I'll be fine with my 400 shares and my 4 covered calls. We'll see how this plays out, but right now everything that I'm looking at is still quite bearish. But right now everything I'm looking at is quite bullish. Let me know down in the comment section what you think of the Christmas season, Christmas rally, and the Christmas season of trading. Are markets going to continue to go higher without any risk, or will we see a breakdown eventually? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.